Hello, I am back. Today is an interesting show. This is stuff I put together during the whole week. Stuff that I think is super interesting, super important to know, things you may have missed, and we had a lot of stuff happen. And I spent enough time this week talking about the political implications of crypto, so I'm not even going to touch that today. But this will be a fascinating journey, going to the intricate world of trying to finance crypto, DeFi, liquid staking, AI, macro, oil, geopolitical risk, all in about 20 minutes. Ready? Let's go. And thank you as well. Jeff Hammer, you're too kind. Sean Donnelly, thank you for being here as well. And no, this is financial advice. And thank you to Patreon too, make all this possible. This is the week divided by Bitcoin. What happened over the last week? Well, Ethereum, bonkers week, up 21.39%. Yes, Ethereum had its day in the sun because the ETH ETF was approved, something we knew was going to happen eventually. But it came about a little bit sooner than many expected. And that's just the way risk works. Risk happens fast. And now it's a bad political look to be anti-crypto. So you're in the right place. In terms of dollar terms, or as I call the melting fiat ice cube, Bitcoin, 69,200. It's up 0.38% for the week. And that's kind of interesting because despite the fact $1 billion came into the ETFs last week, it didn't move. But over the last 2 weeks, it went up 13.5%. That is the interesting perspective there. And again, ETH you see up, Sol down 1%, Ton down 1%. The rest kind of more or less flat. And you know what happens typically in these markets, once there's a big event like that, Ethereum sucks, or wherever the winner is of the week, it sucks in all the liquidity, and that's exactly what we saw there. Now, in terms of sectors for the month, hot sectors that are making the most money, number one, real world assets, and number two, DeFi. I will be talking about DeFi today a little bit. A couple of very interesting things happening, and it shows you the complete dichotomy between many of the sectors. I like DeFi. I invest in DeFi because it's what I understand most. I don't understand meme coins, but I do understand DeFi. We'll dig into that too. Thank you, Polly, for coming. Let's break down the L1s, L2 action for the week. 30-day gains. Obviously, ETH up 19%, really well. Solana, 14%, near 15%. Pretty good over the last 30 days. In terms of TVL, Phantom wins the week. Stablecoin volume, Solana wins the week. The development commits, Cardano wins. Daily active users, Aptos wins. And daily transactions, Aptos wins. When you have a spike in daily transactions, you typically have a spike in daily addresses. That's just how it works. A visual of the top major tokens for the week here. You can see the big blue stick is Ethereum, up 20.7%. And remember, percentages can vary from the time at which they are measured. This was measured a few hours ago. Bitcoin 2.6%. Solana down that 1% like we mentioned. And everything else, the average gain for the week is 1%. But if you pulled out Ethereum, it would be a lot worse than that. So that is the skinny right now. Now, speaking of Ethereum, despite all the excitement about the ETH ETF, there's been no uptick in transactions or activities on the chain. In fact, it's gone down a little bit over the past couple of weeks. And here you can see ETH is still inflationary, ever since it becoming inflationary a few weeks ago. The amount of ETH burned over the last 7 days, 7,000, and the amount issued, 17,600. So that translates to about a little bit of inflation. Not too much, but still, it's there nonetheless. The other thing with Ethereum as well, some of the fees are still kind of heavy. This is from Marty Party, and somebody called Jared from Subway, MEV Bot, whatever that is, identified a transaction fee of $126,037. One transaction. That was also Uniswap related. Pretty heavy. Again, that's a huge fee. But that stuff kind of happens. Other news of the week as well, in case you missed it, FTX completed their final sale of Solana in the whole, whatever the estate is. That's now gone. It was sold. They sold about completed sale $2.6 billion worth of tokens. And it was purchased by a group called Figure. And I know other players were in the mix, Galaxy, Pantera, etc. But Figure completed the final auction of the FTX official for $2.6 billion. They bought 800,000 tokens for about 80 million or around $102 a token. Remember as well, what they are doing is they are buying this, but they're locked in for a period of 4 years. They can't buy it and sell it at 160 bucks. They're locked in. So basically, more of the supply is taken off the market, which makes the asset actually a little bit harder. So this is stuff that actually we like to see. Dr. Sauce, thank you for coming. Now, everybody's asking about liquid staking. What the heck is it? And is there risk to it? I think I might do a dedicated video on this because sometimes we can be, as humans, enticed by returns. But I don't agree with that. It's against my philosophy. I like safety first. But this is an interesting chart. Shout out to Sanjay for sharing from Milky Way. Notice here, this is the breakdown between Ethereum and Solana for staking, right? The blue is circulating supply. That's unstaked. For both. And you can see not much is unstaked for Solana. In terms of the amount, let me get this right. Solana has 3x the amount of SOL staked versus Ethereum, yet only 6.9% of that is liquid staked, whereas Ethereum has 65% of staked ETH is liquid staked. So there's more liquid staked ETH than there is staked ETH, which is quite incredible. And what happens next for staked SOL is very obvious here in my mind, and that's a big opportunity. And you're going to see a lot of activity happening there. There's immense opportunity getting into this business. But remember also, there is risk. There is liquidity risk. There is contract risk, and a whole bunch of others. So I will, if you are interested in permanent loss risk, etc., I meant to say smart contract risk. If you're interested in me digging deeper into the pros and cons of this, let me know. I can always reach out to Mert, get him on the channel, and he can walk us through it all because he now runs a validator. He is involved in Solana staking, and he's also involved, I think, in some way by some of this liquid staking as well. So we'll find out. Let me know if that's of interest. But what's really interesting too is when you break down the DeFi sector of crypto, which is huge, by the way. You can see here the total is $160 billion or something big like that. I can't quite make out the numbers, but you can see the biggest slice of that DeFi landscape is now liquid staking, of which Ethereum makes up a truckload of it. So that is incredible. Lending is about 50 billion, DEX about 24 billion, bridges 25 billion, yield 11 billion, restaking 20 billion, etc. So it is fascinating to see. Thank you as well, Adam Q and Theo Su, for coming. The Australians and the Canadians are here together at the same time. That's so awesome to see. Now, checking in still on the theme of DeFi, because DeFi is the thing that's going to disrupt TradFi. And I'm a TradFi guy, so I'm going to be disrupted by DeFi. That's funny. So you got to embrace it or die. But here, I thought this is a cool little chart as well. If we look at the leader in DeFi, the major DeFi players, again, it's not a comprehensive list, but the king of the hill is Uniswap. Massive $5.5 billion market cap with 166 million in volume. Now, Jupiter is what my thesis for Jupiter was, it one day could topple Uniswap, but it only has a $1.5 billion market cap. So could it do a 5x price increase from here? Absolutely possible. Also, if you look at the volume, it is not too far from Uniswap, but in fact, Jupiter has done more volume than Uniswap many, many times so far this year. So this is interesting. Now, other players, by the way, on the list, we'll talk a bit about, I think, Injective of makers there, Lighter DAO, Ondo, which is down this week, Aave, Athena, Pendle, a lot of interesting players. And we'll see how it all pans out. But if my theory is right, that the winner takes most, you want to identify the new winner early and get on them while they're not the winner. not when they become the winner. That's kind of key. And speaking of more crazy stuff in the cryptoverse, Solana-based meme coin Bonk has surpassed the market cap of the layer 1 blockchain Injective. Boom. I still hold Injective, by the way, and it has not performed well so over the last month or two. Memes are now bigger than DeFi. DeFi is huge, but some memes, their market caps are completely ridiculous. So anyway, speaking of adoption as well, this is Phantom, and this is only a few days ago. This was May 23rd. Phantom Wallet beat PayPal to secure the number 2 app in the Google Play Store. And literally a day later, the top free finance apps, basically Phantom goes to the top of the list, surpassing not only PayPal, but also Cash App from Square or The Block. And that illustrates the important piece of that, again, as I mentioned briefly this morning, adoption. Crypto adoption is insane. And again, briefly as well from GMI, crypto adoption is expected to hit 1 billion users in 2025. If that happens, wow, we will see market caps go to the moon pretty quickly. So the thing is, though, crypto is never really ready for mass onboarding until now. Now the apps are simple and easy enough for anybody to come in and play with crypto. Send money across the world, overseas, buy an NFT, buy a meme coin. It's all very easy now, whereas 3 or 4 years ago wasn't as trivial. Now, let's look at the stock performance so far over the last week. Microsoft up 2%. Nvidia up a whopping 15%. TSM as well, riding the coattails. Tesla up 1%. The rest kind of not much happening across the board, up, down, flat, etc. But what's really crazy is the Nvidia results. And that brings us to the next section. But before we get to that, this is another cool chart as well of how 401k millionaires, these are people that have retirement funds, self-managed retirement funds, often sponsored by their employers. The number of 401k millionaires reached a new all-time high. And this is big news. This is from Fidelity Investments. And as of the first quarter 2024, there were now 485,000 retirement accounts with balances of at least 1 million. And this represents a 15% increase from the previous quarter. And remember, the stock market has hit all-time highs. In fact, I can't remember the exact number offhand, but I think the NASDAQ is up 18% or 23% over the last 12 months. And that's a big part of this too. What's also a big part of it too, of course, is inflation and debasement. As more money is printed, it floats all boats. And here, if you look at the surge in 401k millionaires attributed to the strong performance of stocks, average 401k balance rose 118 grand at the end of the fourth quarter 2023, up 14% for the year. What's interesting about that 14% is that is always kind of my threshold for what you need to make in the markets in any given year, just to keep your head above the surface of the water, tread water. 14% is your bogey target. If you're not making that, you're probably not making any advancement to financial freedom. So that was interesting. Now let's talk about Nvidia. The big elephant in the room, Nvidia's market cap is now bigger than entire stock markets. Forget GDPs of countries and size of countries. Nvidia alone, one company, is worth nearly over $2.5 trillion. And it's now bigger than the market cap of the entire stock market of Australia, Korea, Germany, etc. Solar Bitcoin Coffee, thank you for coming. That is absolutely incredible. Now, related to how people think, and this is a survey that came out from Bloomberg. And the Bloomberg survey asked respondents to, what do they believe is a good inflation hedge? Which haven protects best against inflation? And it's funny because Bitcoin was only answered by 5.1% of the people. And tech stocks, many believe, may benefit from lower interest rates, and their low debt levels and increased costs like wages may offset these benefits. But the point of this is they believe the number one hedge against inflation is gold, 46.4%. US tech stocks, 30.4%. Other, I don't even know what's in the other bucket, maybe bonds or whatever. And then Bitcoin is last on the list. Now, it's kind of interesting because obviously gold is considered the inflation hedge, which over the last 50 years, if you divide it by M2, it lost 75%. So it's not a good inflation hedge. You might find a time series where 3 hours in any given day, it does do well. But over time, no, not at all. Now, what is crazy, though, is they did say tech stocks as number 2. And this is where Bitcoin is obviously the best performing asset, with one exception. Nvidia beats Bitcoin over the last decade. And this is from Lynn Alden, which is a very telling chart. Nvidia made 24,840% return, whereas Bitcoin is only 20,000% return over the last decade. Again, crazy stats, but that's how amazing this kind of AI revolution is. And this brings me to my next topic. And this goes back to the gold rush in San Francisco in the 1850s or 1860s or 1880s. I don't remember. I wasn't around back then, but there used to be a joke. The only people that made money during the San Francisco gold rush were the people selling Levi's jeans and picks and shovels. And the question is, and let me know what you think. Nvidia technically makes the picks and shovels, while all the others use their picks and shovels to dig for gold. I.e., although Nvidia is trying to partner with companies to do AI and AGI, they don't really do it. But the people that buy their chips do it, which is fascinating. So I love this little graphic here, where is the money? The money is in the selling the picks and shovels, as illustrated by this chart here, which is mind-blowing. But I believe, and I could be wrong, I don't believe Nvidia is an AI play, but it's not a pure form AI stock. And I still believe, like Cathie Wood does, there is one company that is, although the stock price wouldn't reflect that at all. This is Tesla. They are not only an AI company, but an AGI company, and they're making a full hardcore pivot towards Robotaxi, Cybercab, whatever you want to call it. And they leaked out some stuff as well in a teaser video from Tesla this week too, which is very telling. And FSD has come a long way, and 12.4 is out. Hopefully I'll get it next week early. Some people already have it, and it's supposed to be 15 to 50 times better than the previous version, which was already absolutely great. No interventions, at least when I drive with it. Your experience may differ. And another Tesla news too from Teslarati. Tesla Supercharger Network achieves 99.97% average uptime in 2023. If you do have an EV and you've ever gone to a non-Tesla charger, literally it's a crapshoot. More than half the time, they do not work. That's it. Or there's a line. But Tesla superchargers, you never have to wait, and they always work. So it's special. Now, speaking of energy, clean energy, the electrification of the world, whether you love it or hate it, what's interesting here is Texas have flipped California for being the new clean energy giant in the United States. And this is the rolling annual power generation from all clean sources in terawatt hours. And now Texas generates about 190 terawatt hours of clean energy, up and to the moon. And remember as well, Texas is a big oil state. So for them to do this, it shows you can have both working together, which is very impressive. Now, speaking of oil, there are some things happening behind the scenes. We'll get to oil in a second, but there are some recession risks that are kind of concerning. First of all, retail sales and gasoline demand is not pretty right now. Also, Target and Walmart this week warned that retail sales were horrible. They're very concerned about their customer base coming in at 0% or flat. And what's even worse is the critical segment of automobiles, a product that condenses much of the economy into one product, has been negative the last 2 months. They're getting smashed hard. That's why you see people like Tesla offering 0.99% financing on their cars, which is now gone, by the way. They tapped out of that real fast. It's now 1.99%, if I recall. But this is going to murder the legacy automakers in a big way. So, time for a pivot. Speaking of oil, too, this is a cool little chart from Commodity Context. Overall, the key part of this chart is not only that oil price is weak. When you look on the right-hand side of the chart, you will see the futures prices for Brent crude oil, and they've been decreasing over the past month and the week, and the latest price being the lowest. But if you look forward to the futures and the future price of oil, it is not good. It's going down, and it could be as low as $72, depending on how things shake out. And this could be due to various market factors, not just supply and demand, but typically when the price of oil goes down, especially in the summertime, which is prime driving season in the US, it shows you there's a problem with the economy. People can't afford to drive as much as before. Or maybe they're using more EVs. We're not sure exactly. Now, this is another recession indicator too, which is a little bit concerning from Game of Trades. This shows you that typically home sales, for the realtors out there, I know there's a few of you out there, I see you, home sales is a leading indicator for a recession. So if you look at this chart, you've got the green line, that's the existing home sales, but it's inverted, okay? When it's up above the zero line, it means it's negative. Okay, existing home sales month over month fell 2% in the last 2 months, twice in a row. Really bad. And typically, what happens, housing weakness, it indicates a recession 12 to 18 months before the job market falls apart, which is super interesting. So we're right here, right now. Typically, for this to happen, we expect labor market to fall apart next, then full-blown recession. So sorry to end on that note, but I haven't ended yet. There's more to come. Also, there are demographic problems. Again, people like Elon Musk have been warning that there aren't enough babies in the world. And Europe is now a continent that is falling apart when it comes to population of working age people. EU and Europe, I guess they paint with a broad brush, but the big standout here is Germany. They will have a fall in working age population by about 9%. They are people between the age of 20 and 64. 10% haircut in labor force over the next couple of years is going to be stunning. So things like robots could not arrive at a better time. And Europe needs to be thinking about them in a very hard way, because they will not have enough workers to do the work unless, of course, it's supplanted by robots and AI in the future. Now, a little bit of geopolitical stuff. I did promise you towards the end. There is a lot of China, sorry about that typo, Taiwan, saber rattling. This is what happens when I don't have anybody to help me on Saturdays. But here, there's a whole bunch of exercises happening now. It's rattling fears out there. You have people as well, again, like Tesla saying, hey, suppliers, we want you to source more stuff from non-China, non-Taiwan, if possible, to prepare for what could be ugly next year. I'm hoping there is no real invasion, but the ratchets are definitely tightening up. And this is also reflected in some of the macro data that you can see in China. Massive record withdrawals of money from bank accounts, and also record gold trading activity in the country. They buy gold when they are nervous. And at the same time as well, they're de-dollarizing too. Another big tipping point of this week, we had the renminbi flip the US dollar as a primary currency for China's cross-border trade and settlement. That has never happened in the history of the world. This will be a challenge for the dollar down the line. Anyway, hope you enjoyed that little macro market, finance, crypto, DeFi recap with a little bit of AI sprinkled in. A lot of stuff happened last week, and that didn't even include all the political stuff too. So thank you everybody for coming as well. Thank you, Solar, Bitcoin, and Coffee, and Jeff Hammer, TND Tesla, I see you there, and Sean Donnelly, and everybody else. Appreciate you all. And now I go back to work for the Q&A for tomorrow, which will be super interesting. It's also going to cover a whole bunch of different topics. I'll be back noon Pacific, which is 22 hours from now. All that work will be done. Thanks, everybody. Have a great evening. Bye-bye.